Welcome back. Our next session will be on the convergence of advanced technology and traditional finance InsurTech by Donald Lacey, CIO Ping An Vision Fund. Manish Thakur, CIO at Echo General Insurance, will be the moderator for the session. Manish Thakur is the CIO at Echo General Insurance. Echo is a fintech company promoted by Amazon, ACL Partners, Catamaran Ventures, and SAIF Partners, among others. Manish has more than 13 years of experience in the cash equity, derivatives, and fixed income markets. Before joining Echo, Manish was fixed income fund manager at Edelweiss Tokyo Life. His team was the first in Indian insurance industry to use interest rate derivatives for asset liability management. Additionally, Manish is also a CFA charter holder. Mr. Manish, over to you.
Thanks, Vivek, and thanks CFA Society for having me. On behalf of CFA Society and audience, may I invite our speaker, Mr. Donald Lacey. He is Chief Investment Officer at Ping An Global, an investment manager formed by Ping An Group to pursue growth stage venture opportunity in the fintech and digital health. In his capacity, he oversees certain investment by Ping An Group as well as the Ping An Voyager Partners, a third-party fintech and digital health fund backed by the global institutional investor. Mr. Lacey joined Ping An Group from Citigroup, where he worked as a managing director in a variety of corporate and investment banking roles. He currently sits on the board of Snapseed, Tolia, and iCapital. Mr. Lacey commenced his career as a financial analyst at Goldman Sachs in New York. He has an SD from Massachusetts Institute of Technology and JD from the Harvard Law School. Donald will have a half-an-hour presentation. After that, we will have a Q&A session. Over to you, Donald.
Manish, thank you so much for that introduction, and thanks to everyone for joining this discussion. I'm excited to be able to spend time with all of you today, and I particularly look forward to the Q&A that we're going to do after this video. I've titled my presentation for today, Implementation of Next Generation Technology in Traditional Financial Services Businesses. And I guess that the reason I've titled it this is that it feels to me like a lot of the presentations that you see in respect to fintech and insurtech generally fall into two camps. They are generally either sometimes hazy visions of the future. Those can be appealing visions of the future, but they're not here and now. Or they're kind of sandbox implementations or kind of small scale implementations of technology that we see today. And I guess that one of the things that animates me about Ping An, which is where I work, is that Ping An is a good example of a business where we have taken next generation technology deeply relevant to our core financial services business and then implemented it at scale in what it is that we do every day in China. And when I talk about scale at Ping An, I really do mean scale. Ping An is a very large insurance company and financial services company. To give you a sense of that scale, we insure roughly 1 out of every 8 people in China, and we employ either directly or as an agent 1 out of roughly every 800 people in China. So when I tell you about things that we do at scale in respect of technology in our business, you can rest assured that it really is kind of massive scale that we work at Ping An. And I'm excited to be able to share with you some of the things that we do day in and day out today at Ping An. I guess I will start with a claim that I will then substantiate, and I can take no credit whatsoever for this slide. This is the result of work that Oliver Wyman did a little while ago. And I guess that insofar as you think about what's going on in fintech around the world as a coming together of, on the one hand, technology companies and on the other hand, financial services companies, And that presents opportunities, of course, for both technology companies, obviously, and also for consumers, obviously. It also presents opportunities for financial services companies, but it presents risks as well. Obviously, risks to financial services incumbents who in technology companies have a new source of competition, and maybe a little less obviously to consumers who, when working with new kinds of technology providers in respect of financial services, may not have the same kind of privacy protections to which they've historically been accustomed with traditional financial services companies. But if you think of fintech as a coming together of big tech and big finance, one way to proxy for the relative development of fintech in different markets around the world is to ask how advanced is big technology's encroachment into financial services. And this slide tells to me an interesting story. If you look at different kinds of financial services activities that different technology companies provide around the world, and you can think of them as payments, account management, credit, insurance, asset management, it feels pretty indisputable that firstly, the big technology players in China are more advanced in their offerings in these different niches of financial services activity. But also, and this is what the little arrows show on this page, they are doing their financial services offerings are capturing quite significant volumes in their local market. So for a variety of reasons, China today is a leader in respect of technology's encroachment into financial services. And what that means is that if you are a traditional financial services institution, as Ping An was, Ping An is, you face a more immediate challenge in respect of what to do about the encroachment of big tech onto your home turf than you do at the moment in the West. And I think that's going to change in the West, but the immediacy of the problem is most acute in China. And before I get into how it is that Ping An has addressed the role of technology in our core business, I want to linger for a second on why it is that slide that I just showed you is in fact the reality. A lot of people ask me why it is that China is maybe a little ahead of the West in respect of fintech at this point in time. And I think the answer is multifaceted, but I think it goes to a couple of different things. One really important thing to know about China, because everyone talks about Alipay and WeChat Pay, the big wallets that achieved massive scale in China not very long ago, and people talk about why it is. One of probably the single most important factor behind the rise of those wallets, and those wallets then engendered a whole host of other financial services offerings. But the kernel was the development of the e-wallet. And there was a very interesting phenomenon that took place in China. On the one hand, you had a tremendous penetration of mobile internet. So very high percentage of the population had access to smartphones relatively early on. That gave rise to a proliferation of e-commerce and social media platforms. But more than that, once you have the phone and once you have the social media platform, there is a natural tendency to want to buy things on an e-commerce site. I mean, this is a natural next step. And the question is, how do you do it? In the West, the answer is you can use a credit card. But the problem that confronted the e-commerce platforms in China was that there was extremely low credit card penetration in China. And so what that meant was that you didn't have the ease of whipping out your credit card and using that particular payment medium to transact online. You had to have something else. And what was interesting was that although on the one hand, nobody in China had credit cards, on the other hand, everybody had a bank account. So what that meant was that there was an existing infrastructure for KYC and for payments that resided within the banks. And so what that meant was that if you could piggyback on the high penetration of bank account setup, then what you could do is you could leapfrog the need to have a credit card and move straight to the e-wallet. And that is exactly what happened at tremendous scale in China. And once that had taken place, it became very easy for technology companies to offer other kinds of product offerings related to financial services, like insurance. And so at Ping An, which started in 1989, so a relatively recent insurance company by the standards of insurance companies around the world, and for a while was, I think, a quite traditional financial services business. We saw this encroachment, this rapidly advancing wave of technology companies that were in a position to threaten our home turf, and the challenge that confronted us was how does one appropriately react to that? And Ping An's strategy took a variety of different forms. At the root of our technology development program was what was at the time a very risky and gutsy decision to transition entirely to the cloud. So well before other businesses around the world were talking about cloud, particularly well before other financial services businesses were talking about cloud, we made a decision to jettison all of our mainframes and to move entirely to the cloud and to rework as much of our software as we feasibly could into a true cloud native architecture. And what we did simultaneously with that was we began to invest very heavily in developing our own network of digital ecosystems. So what I mean by that is that we set up individual companies, separately capitalized companies, and in some cases we took outside funding from the likes of SoftBank and other very well-regarded international investors. And we used those different companies to set up consumer-facing portals that addressed different kinds of consumer needs that had some relation to financial services. So one example would be a business we set up called Ping An Good Doctor. Ping An Good Doctor is now a publicly traded company. By our reckoning, it is the world's largest telemedicine platform. We have something like 300 million users who are on that platform today. And the relevance of telemedicine to a very large health insurance company, as Ping An is, hopefully is relatively clear. Another business that we didn't start, but we acquired a majority stake in and then invested in quite significantly, is a business called AutoHome, which is today China's leading online auto marketplace. The thing about looking for an automobile and buying an automobile, particularly online, is that at the moment you transact to buy an automobile, there are all kinds of obvious things that you can do if you're a financial services company. You can talk about offering insurance to somebody who needs insurance because they just bought a car. You can talk about a loan to finance the car. You can talk about maybe a credit card. You can sometimes talk about extending floor plan financing to a dealer whose transaction history you know because you are operating the platform on which that dealer is transacting. So AutoHome, today a public company, market cap of about 12 billion US dollars. And another business that we built was a business that we believe is one of the largest purely digital wealth management platforms, a business called Lufax. And all of these businesses today, when you add them all up, we address more than 500 million internet users across all of these different channels. And roughly 40% of the new customers to Ping An, the new customers to our traditional financial services business, originate via one of these digital ecosystems. And what that means is that the stories that I'm telling you are not kind of fun sideshow stories that an innovation department has come up with that are interesting but are not really core to what our traditional financial services business does. What I'm telling you is that these digital ecosystems that we've built are now the single most important source of new leads and new customer relationships for our traditional financial services business. And, you know, to us, that's a powerful example of the way technology can make financial services companies much more effective at their core mission of serving customers. We are today extremely committed to a continuing technology development program. We have more than 21,000 patent applications around the world, and we have in-house R&D staff. And when I say R&D staff, I mean bona fide PhDs in computer science, data scientists, software developers of over 35,000 team members. And what I wanted to do was to talk. So this part of the story is about the way we originate customer relationships. So we have a collection of digital ecosystems that we use to bring customers into our funnel. But you know that because many of you work at financial services institutions, you know that that's a very small part of the overall story about the way a financial services company interacts with its customers. There are a whole lot of other things that are very important for you to do right and for you to do in a way that is delightful to the customer once you get them in the door. And what I wanted to do next is to share a couple of examples with you of things that we do with our customers once they become our customers. One thing that we do, many of you who work in insurance know that a significant pain point for any customer in insurance is the process of submitting a claim and getting paid for a claim. And if you are in the United States and you're in an automobile accident, it can take quite a long time for that claim to be settled. And that's disruptive to your life. It's not fun, requires a lot of paperwork. It's not a good experience. So one of the things that we set out to do at Ping An was to see if we could use artificial intelligence to reimagine the nature of the claims process. And for auto insurance, we today have a system that enables roughly something very close to real-time claims settlement of auto claims. You can see on this page how it works. If you are in an accident, in a fender bender somewhere in China, and you have a smartphone, as you definitely would if you were in China, then step one is you take out your phone, you turn on the Ping An app. The Ping An's app recognizes you. You take a quick photo of your car. Ping An verifies that that is in fact the car that we thought we were insuring, and you are who we thought you were. You then take photos of the parts of the car that have been damaged. And what we have is a very sophisticated AI engine that will take all of those different photos and without any human intervention whatsoever will identify the part of the car that has been damaged, the extent of the damage, the severity of it, and our engine will come to a view on whether that part is damaged beyond repair, whether it needs to be replaced, maybe it just needs new paint, maybe it needs a dent to be removed. And what we then do is we link that assessment that is generated by our AI engine into a collection of databases that have information on parts, on repair costs, on nearby garages with whom we might have relationships, all of that stuff. And what our app will then do is it will say, look, if you want to settle the claim, hit here, and we will wire the money right now to your wallet. So that can happen in real time as you are standing over your damaged car right after an accident. Or if you don't want to be paid out for the claim, if you want the automobile to just be repaired, we will direct you on the app to the nearest Ping An approved mechanic that is in the area. And what this means is that, again, the process of submitting a claim, which used to be something that would take many weeks and would be very frustrating to the end consumer, all of a sudden becomes a delightful experience where you have a problem and your insurance company is able to step in with no human intervention 24/7 and settle a claim in a way that is a dramatic improvement on the status quo before. So that's an interesting story to me, and it's a good example of the way a financial services incumbent can identify a pain point in their business and take next generation technology, in this case AI image recognition, to dramatically improve the quality of the customer experience. What's kind of interesting also to me is the way, once you've figured out how to use AI image recognition to address one pain point, you can very often use it to address other, maybe less obvious pain points as well in your business. And one of these for us is livestock insurance. In China, as in many other parts of the world, for many families that live in rural areas, a significant portion of the wealth of that family is tied up in one or two cows, one or two pigs. And this is the basis upon which the family makes money and cares for its family. And so what you want, if you are that family, is you want to insure against the unexpected loss of the cow or the pig, because if the cow is going to be your main source of milk for the next many months or years and it dies, that's a really big problem for you. So Ping An for a very long time has had a business where we insure families, cows and pigs all around China. There is a problem with that business, and the problem with that business is if you imagine Ping An, you need to make sure that the cow that you've insured is in fact the cow that dies. So what that means is that if I am a farmer in rural China and I want to insure my 3 cows, it's actually quite expensive for Ping An to send out an agent to verify the identity of the cow and the health of the cow at the point of insurance. And then to the extent I make a claim on Ping An, well then it's very cumbersome to send out a claims adjuster to some part of rural China and take a look at the cow and make sure that in fact the cow that has passed away is the cow that we thought we were insuring. So what we have done is we have taken the same kind of underlying AI image recognition technology that we developed initially for use in the the auto claims process, and we have applied that to livestock insurance. So what we were able to do is if you are the family and you'll have a smartphone like everyone else in China has a smartphone, what we'll do is we'll let you take a photograph of or take some footage of the cow. We will be able to, or the pig or other kinds of livestock, we'll be able to recognize it. So we have built the world's first bovine and porcine face recognition system. So we will use that to verify the identity of the livestock. And then we will also be able to verify whether the livestock is live or dead. And those two things taken together enable us to pay out insurance in a much more effective fashion. And what that means is that we're able to offer that insurance in a much cheaper way than we were able to before, because a lot of our expenses go away when you're able to automate all of this recognition process. One other thing that we do that I thought you would find interesting, because a common problem that insurance companies all around the world face is the identification, the training, and the retention of life insurance agents. And as I said at the beginning of this talk, Ping An it employs either as agents, mostly as agents, or salaried employees, roughly 1 out of every 800 people in China. So you can imagine that the problems that you might have at your insurance company in respect of, finding agents, training them, retaining them, this is a tremendously large problem that Ping An faces. And one of the things that we've been able to do with the advent of smartphone penetration and AI is we've been able to really completely rework the way we handle life insurance agent training and retention. So when you become a Ping On agent, what we do is we monitor your activity on the basis of what you're doing with your smartphone. We look at the kinds of policies you are originating. We look at the number of contacts you are having with potential policyholders. We look at the kind of advertising materials and policy materials that you are sharing with different customers. And we look at your hit rate. We look at how your clients react to you. And we take all of that data, which is generally gathered on the basis of your smartphone and WeChat interactions with your prospective and actual customers. And we aggregate that in to a giant corpus of data that we then compare against different things that we've seen with other agents in the past. And what we're able to do on the basis of that is to give feedback to your agent manager. And we're also able to give feedback to you as the agent directly. So for instance, what we can do is we can see if I joined as an agent at Ping On, maybe what we can see is that the kinds of, I have, if we look at my WeChat contacts and the people that I'm marketing to, we see that I'm in a relatively wealthy part of China, and we see that my customers actually are relatively wealthy, but you might notice that the kinds of policies that I'm selling to those customers is a very low quality kind of or low premium kind of policy. And if that's the case, then what the engine will do is it will suggest that I take some courses in higher value policies, maybe investment oriented policies. Maybe what will happen is that the engine will notice that although I was very aggressive and very effective in the first couple of months of becoming an agent, my activity seems to have trailed off dramatically after I got a higher number of client rejections in the week before. And what the engine will do is it will send a note to my manager saying, hey, we've noticed that Don was an effective agent, but he seems to be at risk of quitting or becoming an inactive agent. So what you should do, manager, is you should try to take Don out for a coffee next week and tell him that he's doing a good job. And these suggestions come up via that manager's Ping On smartphone. And the result of all of this monitoring of our agents is manifested in some real numbers, and you can see those numbers on the right-hand side of this page. You know, we are an extremely large insurance company in China, so you would expect that no matter what we did, our average numbers would be pretty close to the average of the industry. And in fact, if you look at first year premium per agent, you see that our first year premium per agent is materially higher than the average of our major competitors. You can see that the activity ratio of our agents is significantly higher than that of our major competitors. And you can see that the high margin policy sales activity that we have is much greater, again, than our major competitors. And it was not always thus. These numbers have gotten much better as a result of our approach of mining data on the performance of our agency base, and then running that through an AI engine, and then acting on the suggestions and insights that come out of that engine. And finally, the last thing that I wanted to share, something that I find really interesting, is that over time, the different approaches that technologists have used to simulate human speech have gotten better and better and better. A few years ago, Google had a breakthrough with a technology that they called WaveNet. And it was at that point that we were able to have voice technology, computer-generated speech, that was very, very close to indistinguishable from real live speech that a human being might utter. And within Ping On, what we've done is we've taken similar technology. We record all of our inbound phone calls. So we record over 1 million inbound phone calls per day at Ping-On. So we have a very large corpus of voice data. And what we've done is we've used that data corpus to generate a series of voice models that are localized. So in the same way that in the United States, someone from the North is going to sound different from someone who is from the South, what we've done is we've developed a collection of speech models that have different accents and different manners of speaking. And we've used those to then develop a collection of AI-powered outbound voice call robots. And what's fascinating to me is that these outbound call center robots that will troll through our list of customers and then call them with different kinds of offers for different kinds of credit cards and simple insurance policies are not just as good as human outbound call center agents. They are in fact outperforming, for some product lines, our human outbound call center agents at rates that can be 2 to 4 times higher than what we get out of our actual human employees. And this is all down to a combination of very realistic speech synthesis, as well as pretty sophisticated heuristics for walking through yes/no responses that prospective customers might give on the phone. All of these examples that I've given, the AI claims process, the livestock recognition, the agent training, and the outbound voice robot technology are all new technologies that Ping-On has developed in-house and has deployed at scale to great effect, and is operating today at scale in our business. And I think that what we'll see other insurance companies from all around the world begin to adopt similar technologies as these technologies become more diffuse. So I thank you for your time. I really look forward to the Q&A, and please ask any questions.
Thanks, Don. It was a very insightful and enlightening presentation. You very well explained how use of technology can not only increase the speed of claim payment, but it will also reduce costs associated with claim settlement process. The slight use of technology will be win-win for both the parties. So it was exceptionally insightful presentation for everyone. Now we'll start a Q&A. My first question is, till a couple of years back, insurance was sold through commission agents. Once fintech start getting traction among insurance buyers, traditional company also try to capture this market and selling insurance through the website and app. My first question is, what is the difference between selling insurance through website and an insurtech or a fintech company?
Well, I guess, thank you, Manish, and it's good to see you again. I guess that one of the things that you have to differentiate between is how much of the process really takes place online. One of the things that you notice all around the world is that everybody, as you say, has a website right now. And so, there are a lot of very traditional insurance companies around the world. There are a lot of very traditional mortgage companies around the world. There are a lot of very traditional, you name it's around the world, who will say to you, well, we're doing stuff in a very modern way. We have a website. If you walk through what the process actually looks like on most of those websites, the reality is that it's actually not a very good experience at all. And very often what happens is that you kind of answer a few questions on a website, and then you kind of get a message saying, thanks, don't call us, we'll call you. And that's the end of the website experience. So I think that the goal of many of the more modern, more progressive insurtechs and other businesses that you see out there is to move the entirety of the process online and to actually do underwriting online in a much faster fashion and actually get a policy issued online, which is very different from me just having a website that says, hey, this is Don's insurance company. Here's some information, and if you want to know more, well, I'll call you. So I think that's a pretty important differentiator.
So another question is, one of the big pain point for insurance industry is insurance fraud or insurance false claim. Traditional and fintech, both insurance companies are struggling on this front. What's your experience in general? How tech can improve us to reduce this insurance fraud?
It's an excellent question. You're right. Fraud is a problem in insurance, both in traditional insurance companies and with insurtechs, as you know. I think what's interesting is that you can begin to address a lot of the instances of fraud by making use of different kinds of data that you're able to get from a person, sometimes without that person knowing they're giving you that data when they're filling stuff out. One good example is there's a whole corpus of data that now exists around response time to different questions. So for instance, if I'm applying for a term life insurance policy on Manisha's website or on your app, and I'm answering yes, no, and then we get to a question of, Don, do you smoke? And there's a really long hesitation before I hit no, I don't. That sends a signal that there might be a good reason to sort of question the veracity of my statement. One thing that we do at Hang On, this is an example that relates more to the extension of credit, but it speaks to the same underlying fraud issue that you're talking about, Manish, is if you are applying for credit on one of our instant credit facilities, we will say, Manish, where do you live? And you will say, I live at address X, and we will be taking video of you when we ask this question. And what we'll do is there will be an AI bot. This is not a human being. An AI bot will be, Manish, tell us where you live. And you will say, I live at 5th Street, at the intersection of Osborne and 5th Street. And then what our AI will do is it will pick out a local landmark, and it will say, oh, so you must spend a lot of time at the 7-Eleven that is across the street. Or it may make up a landmark that isn't there. And then what we'll do is we'll watch your response. And if you say that you've lived at 5th Street and for the last 5 years, and we say, oh, do you like the 7-Eleven on the corner? And you hesitate and kind of look off to the side like you're not sure that it's there or not. That's a sign that maybe you're not being straightforward with us about where you live. And that's something that we do, again, solely using AI. So there's not like a person in the loop on our end. But if these red flags accumulate, and if too many of them accumulate in respect of your credit application, then what we'll do is we'll take it offline and we'll say, Manish, sorry, we're not able to do an instant credit extension right now. We're going to have to review your document and talk with you a little more. And we do things like that in respect of life insurance as well. So it's not a perfect solution to fraud. Fraud is always going to be with us, but it's one way we use technology to try to cut down on it.
Thanks, Don. Next question is, many large companies still struggling with face recognition technology. Whereas you explain Ping An is using claims recognition process based on the face recognition of animals. Now, I believe was this you were in one of your video explaining this, and I always wanted to ask this question. And thanks to CFA Society, I got an opportunity to ask this question. That how this idea originated that you can use a face recognition of a livestock or a bovine face recognition. Okay, and how do you convince your customer that their claim will be accepted or rejected based on the face recognition software? I assume not all the customer is tech savvy.
So how did we come? The two questions. Thank you for both. I guess the first question: how did we come up with the idea? one of the interesting things about Ping An, something I really like about Ping An, is that we've got a tremendous amount of in-house data scientists, and we've got a tremendous collection of in-house AI experts. So when I tell you about these things that we've built, it's never the case that what we've done is we outsourced an idea to an external consulting company and they kind of built something. It's never the case that Microsoft did it for us and we're kind of telling you about an implementation of Microsoft technology. All of this stuff is homegrown. And I think what happens when you have data scientists and top flight computer scientists who are on staff all the time, you have kind of a natural back and forth. And one of the things that is a neat feature about Ping An is that virtually everybody in the company, as part of their annual KPI assessment, has an innovation box. Like, you have to have done something to make your core business better. You have to have done something to advance the business. You don't get a perfect score if you just did everything this year exactly the way you had done it the year before, even if you hit all of your numbers. You got to always be advancing the state of the art. And there's kind of a natural cross-pollination of a lot of these ideas. We've shared the auto image recognition solution that we have very widely within the firm. And imagine you were the person in charge of the agricultural insurance function at Ping An. You look at that story of the auto claims thing and you think, I wonder if it's possible to do something like that in my business. And it's that kind of process that gave rise to the solution for the porcine and bovine face recognition capability that we built. In terms of how you convince customers that the solution will work, I guess the proof is in the pudding. And like anything else, as successful cases build up in a community, people develop more trust in it. One of the things that I think is interesting about China is that that there's, even among not particularly wealthy segments of society, there's a pretty broad embrace of technology. There's maybe more of a willingness to try new technologies than you might see in other parts of the world. So we haven't really had any problem with people not trusting the technology or not being interested in taking it up. One reason is that, by doing it like this, the product is a lot cheaper and a lot more appealing and a lot more effective than the old product.
Next question is from one of our audience related to Ping An only. The question is, how did incumbent insurance companies respond to the disruption created by the Ping An? Did they lose existing customer, or did Ping An and similar companies grow by acquiring entirely new kind of customer?
Well, one of the things to keep in mind is that, in many ways we are an incumbent. So, Ping An for quite a while was a very traditional looking insurance company. We started as a marine insurer in Shenzhen in 1989. And for quite a while, our business was a very traditional looking business. So, it's not like we broke onto the scene like an ACO a couple of years ago and are completely new to the field. We grow. There's a lot of significant growth that is embedded within the overall market of China. So yes, we grow by taking share, but a lot of what we do is really, there's a lot of embedded growth within the China market as well.
The next question, does Ping An or any of your fund has an investment in India? And how do you see tech adoption in India insurance industry compared to China?
Yeah, so we do have one investment in India. We are investors in a business called Cardeco, which is, as many of you probably know, it's one of India's leading online auto ecosystems. And the reason we invested in it is that we saw in Cardeco a lot of parallels to the business I spoke about earlier, Auto Home. There's a tremendous amount of things you can do from a financial services standpoint if you are at that point of sale in the auto ecosystem. And so we're very happy with the investment, and Cardeco we think is positioned to do exceptionally well in India and in Southeast Asia, I should say.
Okay, great. So another question which is related to the AI. The question is, if I frame it slightly in different way, suppose based on the AI, a claim is rejected and customer is not satisfied. Obviously there should be another process to handle the unsatisfied customer. Is that process also based on AI only, or there is a human intervention there?
So it is absolutely the case that AI is not a wonderful solution for every single claim that comes through the door. That is absolutely the case, and there are definitely lots of instances where the instant claim just doesn't work because there is some quirk in the claim, there is some level of complexity that the AI is not in a position to deal with, and so we absolutely have people in the loop at that point. So you definitely can talk to a real live person at Ping An. That absolutely happens, and there are definitely claims that get escalated and require human intervention. So that is absolutely the case. I guess the point that I guess I'd make around both the voice robot technology I talked about and also the AI claims technology that I talked about is not that many of you are insurance professionals, so the way the entire industry lives and dies on mere basis points of efficiency. And so I guess that the point is not that AI is able in all instances to remove humans from the equation. The point is that if you can have an AI solution or a voice robot solution that dramatically reduces the number of times you need to involve a human in a particular situation, that alone has a tremendously positive impact on your bottom line. I mean, that makes you a fantastically more efficient operation than you would otherwise be. So I guess that's sort of how we think about the virtue of AI. And if I implied that we have AI that does absolutely everything for us at Ping An, that's not mistaken. That is mistaken. We've got as I say, we have we employ one way or another 1 out of every 800 people in China. So I mean, we still have a need for a lot of people.
So we have discussed very good thing about technology, but there are some apprehension as well. Currently, whole world is adopting AI. Insurance of financial services is not the only industry. People are discussing about self-driven car. These technology are a great thing for society because this will reduce the number of accidents. But lower accident also mean lower premium for insurance industry. Don't you think in longer run, digitization will affect insurance industry negatively?
It's a provocative question, Manish. I think I do think on the one hand, I think there's always going to be a need for insurance. I mean, it plays a very important role in many people's lives, and it is essential to the functioning of society. So there is always going to be a need for insurance. The kind of insurance that people may buy, I think, will absolutely change. And I think you can make a very strong case that the advent of self-driving cars, I don't know exactly when that advent will be. The date keeps getting pushed further out, but at some point, I'm willing to agree with you that we'll be at that point. I would strongly suspect that self-driving cars and perhaps wholesale changes to the whole model of mobility, where we move from every person owning a car to maybe a system of more shared mobility. This will have pretty profound impacts at some point on the insurance industry. And it might, if you define the health of the insurance industry as amount of auto premium written, well then, yes, I guess it could be a bad thing for the insurance industry. What the experience of the entirety of history tells us is that there are always new opportunities that emerge on the basis of technological disruption. So, in the same way that we no longer have horse and buggy insurance, and so the advent of the car was a terrible thing for horse and buggy insurance. We now have car insurance. I think you can imagine any number of different insurance products that people don't talk about so much now, but could play a much greater role in the future. We're seeing growth in cyber, which we all know about. I think that will only continue to grow. So it's a changing field. It changes more than people give it credit for.
So next question from our one of our audience is. What role has the regulator played in developing insurance sector, especially the insurance tech environment in China?
Yeah, the answer varies a whole lot all around the world. I'd say I'll answer it this way, because one of the things that I think is a kind of a misperception of the way things work in China is that there's kind of a widely held view that Ping An is able to do what it does, and other insurtechs in China are able to do what they do because there's no such thing as customer privacy in China. There's a widely held perception that in China you can do whatever you want with somebody's data, and nobody regulates it, and so as a result it's the Wild West. And if you're a tech company, you can do all this stuff in China that you couldn't ever do in Germany, you couldn't ever do in the United States, you couldn't ever do in India. And I think that perception is mistaken. The regulator in China has, I think, been quite proactive in developing privacy regulation. So there's a lot. If you look at what's actually written, there is a lot of privacy regulation. And if you're a big company like Ping An, you have to really work very hard to adhere to that. It is the case that there are smaller companies, like there are smaller companies everywhere in the world that don't always adhere to the letter of the law. But if you're a large company like Ping An, you really need to, and so we do.
One more question. Apart from few exceptions, in Asia, the penetration of insurance has been very low. In India, the insurance penetration is close to 1%. Do you believe technology can change the scenario and bring more people into the safety net of insurance? Especially the time we are going through, many people don't have a health insurance, at least in India. So do you believe technology can play a role where we can bring more people into the safety net of insurance?
So I absolutely do. And, to me, this is one of the great promises of so much of fintech, so much of technology. I think that, one way to think about fintech, one way to think about insurtech is to imagine it as having a dramatic impact on the frictional costs that, typically impact buyers of a financial services product. You can think about it. This is obviously not an insurance story I'm going to relate, but you'll see where I'm going. If you imagine transferring money, right? Imagine that you are a wealthy person who is trying to transfer $100,000 from, let's say you're trying to transfer it from Mumbai to with foreign exchange, maybe that's not a great. Let's say you are in some foreign country and you are trying to transfer money to London, and you're trying to transfer $100,000 US. You know what? The rails that we have right now for that kind of a transaction are actually pretty good. You get a pretty good rate. You pay a fee that is quite small relative to the $100,000 that you're trying to transfer. It's not that bad a system. It's a pretty good system if you're trying to transfer $100,000. Where the system really fails us is if you're a domestic helper in Singapore trying to transfer $70 to the Philippines. If you try to do that, then a tremendous fraction of that $70 gets eaten up by different kinds of transaction fees, by a terrible rate. And that's all, a lot of that is the function of the quality of the underlying rails. So the clunky plumbing in financial services, it falls most heavily on that part of society that is least able to afford that frictional cost. I mean, it becomes a much more significant problem for the most marginalized members of society. And within insurance, we talked a little bit about the frictional costs of insurance. The that as you get rid of those frictional costs, insurance should become a much more flexible and much more accessible tool for a much broader swath of society. And to me, that's a really good thing. I mean, that's a pretty exciting development. And a lot of the promise of InsurTech, I think, lies in that. I mean, to me, that's kind of the most exciting thing about what it is that we all do for a living. It's making insurance more widely available. You're right, penetration rates in India are super low. Penetration rates in a whole lot of the world are quite low. And, I'd love it if we could transition to a world where we were able to cut down frictional costs to an extent that the fundamental product just became more accessible.
Any advice on how traditional finance companies can adopt digitization?
I'm sorry, say again?
Any advice on how traditional finance companies, including insurance companies, can adopt to digitization? What they should do so that they can very fast capture this market?
So yes, I guess that one of the things I guess is a little more in vogue now is a talk of transitioning to cloud. One of the things that I think was really essential to a lot of what Ping An has been able to do in the last 10 years is the decision that was taken to transition virtually everything we do to the cloud. The moment you become a cloud native operator, a lot of the things that are kind of theoretically possible become actually possible. One of the great lies in insurance in particular is that our data will save us. I'm an insurance company. I've been around for 200 years and I have all of this data that I can do things with. I know lots about a particular kind of insurance product. I know lots about a particular kind of customer in my part of the world. And people say this all the time. But the reality is that most of the time for the 200-year-old insurance company, the information that you have is not in any way accessible or manipulable because it is sitting in filing cabinets around the world, or it's sitting in different mainframes that rely on antiquated batch processing and are you can't really get at the data. So you kind of need to break that paradigm if you're going to start doing innovative things with data. And so that to me, transitioning to a cloud native microservices kind of architecture is pretty essential to really doing things at scale. It's something that a lot of traditional financial services companies are hesitant to do. But I really think it is essential. One anecdote I have, Manish, is I was talking to a big reinsurance company the other day, and the CEO of that company was describing all of the problems that they have in accessing data and doing things with data, and it was just one problem after another. I mean, it was just a nightmare to hear him describe it. And I said, have you ever thought about just chucking all of your mainframes and transitioning to the cloud? And he said, well, I'd like to do that, but I don't want to be beholden to the big cloud companies. And, in the year 2021, that's a little bit, I think, like me saying to you, well, Manish, I know my factory would work better if I had transitioned to electricity, but I don't want to be beholden to the big utility companies. We're kind of at a point where it's essential. So to me, that's a big part of the overall equation.
Thanks a lot. There are many questions, but we'll take one last question. On InsurTech, what are some of the career area CFA charter holder member should be focused
on? Within InsurTech, this is not going to be I'm not going to impress anyone with the level of insight in this answer, but I guess that, to me, you can't go wrong with a data science background. And that's the sort of thing that I would expect the very numerate members of the CFA society to kind of have a natural affinity for. I think that, the more big data you have access to, the more important it is to have fluency in data science. And that really is kind of the lifeblood of many InsurTechs.
Thanks, Don, and thanks CFA Society. Probably it was very insightful session. I believe everyone will go back slightly smarter today. Thanks, Don. Thanks, everyone.
Manish, thank you so much.
Thank you so much. Thank you so much for sharing such a great insights with us, Mr. Lacey and Mr. Thakur. It was really amazing sessions. As Manish already said, yeah, I'm quite sure we all will go a little smarter today. Thanks again for such a wonderful session. And we know now the AI is the way forward. Thanks a lot. Follow the conference on various social media platforms. You can follow same on LinkedIn, YouTube, Facebook, and other social media channels that's displayed on the screen. This is again very important announcement for CFA Institute members. CFA Institute members and or charter holders may claim 4 professional learning credits by logging in their online professional learning tracking tool on the CFA Institute website. Okay, also, additionally, you can now register exclusively for the workshop for IINC delegates on measuring and pricing risk, concepts and practice to be held on 24 July 2021. Risk is the central theme for all the investment decision makers. Our imperfect knowledge about the future and the present and our many biases prevent us from effectively dealing with risk. Join us for 1.5-hour workshop on measuring and pricing risk. The workshop session will be conducted by Sanket Kavatkar and Sandeep Asthana, 2 of the top authorities on risk in India. Also, please look forward for India Wealth Management Conference, which will be held from 13th to 15th of August. Hope to see you all over again there. Thank you for participating in the First India Insurance Conference. We'll see you again tomorrow at 11 a.m. for other sessions. Thanks a lot.